Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn that how we can use moving average in our entry criteria to identify trend. So this is a very important video to identifying the structure, like where is market going on, like bullish and bearish, and how we can spot our patterns. And once you identify our pattern, then how we can enter. So I will explain all these things in a detail one by one. First of all, you need to understand EMA is a lagging indicator. This is a not leading indicator. So EMA is not a leading indicator. Remember, okay? So once market up and down below the EMA and above the EMA, it doesn't mean that you can directly buy or sell. It doesn't mean that market direction has a change. No, we are using EMA for additional confirmation. First of all, you need to identify our structure, like market structure as a bullish and bearish. If market creating high and creating lower lows, then we can understand that market is going up and down. Simply, then you need to identify where is our impulse and correction. Once you identify our impulse and correction phase, after that, you need to identify our patterns, okay, in a corrective way. If market is a bullish and creating any bullish structure, then definitely we can looking for the buy. But before the buy, we need additional confirmation, which can be used our moving average. Let me explain one by one, that you can understand easily. So generally, when market momentum is a bearish and then market create a small move, something like this, this is our impulsive phase, right? When market create impulsive phase, then we are looking for the continuation and wait for the correction. So this is our correction right here. Okay, so this is a correction, and again we are expecting that market pushing downside, and we are expecting that market continue to downside right here. And same thing happen here. Okay, and after that, what are you looking here? We are waiting for another correction here. If market create here any correction, then definitely we are looking for the continuation in a downside. So this move happened here in a bearish market. Now we can understand that where is market going on. Market momentum is a bearish. This one is the first thing is clear. And second thing is here, you need to identify impulse and correction. Right now, this is our impulsive and correction move. This one is our corrective phase, right? It means these two things are clear. And now we need to identify our impulse and correction. So market just continue pushing downside to creating impulse and corrective phase. And again, once you identify our impulse and correction, you need to mark our proper patterns, like flag pattern is here. So look at this one and how we can deal in this situation. Look at this one. This is our continuation. Everything is a downside. So again, market go higher, right? And then what are you looking here? We are expecting same situation, like if market create here any kind of pattern, then we can sell. Now, the next thing is here, how we can identify this correction is a valid and not. How we can identify that this is our proper flag pattern is a valid or not. And this is our valid zone for the sell or not. So you need to apply exponential moving average. Simply, you need to go in an indicator section and watch our EMA exponential moving average here. And this is our exponential moving average here. Once you click there, then you can simply looks like this one. And this is a 9 by default. You can enter here 50 and setting, you can change color as per your style right here. And then, okay. So this is applicable. Okay, I'm just showing you on time. Then I will explain on chart here. You need to apply a 50 moving average. So for example, this is our 50 moving average here, right? So once price hit our 50 moving average, then we can understand this is our valid zone. This is our valid setup for this sell, right? So in this leg, you can see a 2, 3 patterns create here, but you need to take only first one is here. If market react from this exponential moving average and create here any bearish indication, bearish candlestick, then we can trade, right? And another one is here, you can see the market momentum is still bearish and market create a flag pattern here, still market push downside, but you don't need to trade this setup here. Why? Because price not react from your moving average, right? Why? For example, if you enter here, right? You enter here and you put the stop loss just of it. And then what happened? After this one, market go higher and take your stop loss and react from exponential moving average, and then market went down. So you need to wait for it to react from exponential moving average, then we can sell. Same thing happen here. Look at this one. This one looks like a continuation pattern here. Again, what are you looking here? We are looking here for the sell. So which point we can sell? We can sell if market react from this point and then create any bearish indication, then we can expect a downside move right here. So this is a process to apply exponential moving average on chart pattern, and then you can trade. So I hope you understand what I'm trying to explain here. I will show you some example on live chart, then you can understand very easily. This is our gold chart in a 5-minute time frame. You can apply any time frame. Okay, this is just example. You can use 1 hour, 4 hour, 15 minute, any time frame you can use. I'm just showing you in a 5-minute time frame because strategy work in every time frame. Simply, you need to identify our trend direction. So now you can see market momentum is extremely bullish. Everything is a bullish and creating a higher high. So if market momentum is a bullish, simply you need to identify our impulsive phase and corrective phase. Look at this one. What happening here? Before this move, market was bearish here. This was our first bullish scenario here, correction, and again market create impulsive phase, again push downside, and market push in a corrective wave. So when market create any corrective wave after big impulse, then market create indication that market looking for the reversal to the downside. Same thing happen here, market push downside and break this low and create this strong impulsive move to the downside. So what happening here? Again, create a flag pattern. Okay, this is a continuation pattern. React from exponential moving average and sell. And this is again a strong move to the downside. Looking for the continuation and going higher high because first move was bullish and now shift into bearish and again looking for the upside. And why this move happened here? Because in this case, you can see here that another flag was created at this point. If I am going to show you this point here, right? Because this is a strong impulsive move and correction and we are expecting a downside move. Why this move happened here? Because this was our larger structure here. That's why. Okay. So you need to mark our larger structure as well as before to marking our lower structure. Because once you mark this one, then most of the time you can avoid these type of fake move here. So this is our larger corrective structure, impulse and correction, impulse, correction and impulse, right? Okay, so these things will be clear once you backtest all the things step by step and you. So this is our bullish structure shift here. There is to again bullish, corrective structure, again continue go higher, and this is again corrective structure and price above the 50 moving areas, then we can buy here. Look at this one. This is a very important point at this point here. Look at this one. What happening? This is our bullish structure. Everything looks bullish here. This is our flag pattern clearly. And everything going higher high as per our plan right here. Okay. So this is our bullish pattern. Market close our bit, close of the 50 moving average. So we can buy here. How many times price close below the 50 moving average? But you don't need to sell because price at this point is lagging and people are selling here, and this is a trap for the retailers, for all type of traders. Mostly people are going to sell at this point. Why? Because they are expecting that market was bullish and now turn into bearish, and this was happen here because the trend line is also broken here. That's why. So you don't need to enter here. Why? Because everything is a bullish here. So if everything is a bullish, then you can buy here. You don't need to sell because if you are looking for the reversal entry, then most of the time your stop loss will be hit. So you have to trade with a continuation trade. If you follow the trend, then very high chances your trade gone in a profit most of the time. Okay. So same thing happening here. Market momentum is a bullish, then you need to identify and wait for the clear bullish pattern, not a bearish. If market form any bearish pattern, any bearish indication, then you need to wait for it. So this is our valid entry here at this point right here because price close over it. Okay, price close over it and give it I give strong confirmation here, and this was stop loss and 1:2 is our, at least 1:2 is our target point right here. Okay, and in the first scenario is here, you can see the structure create this one, and this is a larger entry point here and stop loss just below it and target 1:2, which is around here, right? So this can be our both setup here, like first setup here and second setup here. Why? Because everything is a bullish and everything looks bullish and create a bullish pattern here. We will explain these all things in a detail in the next chapter, putting all together video. But in this chapter, we are going to just showing you that how we can use exponential moving average to identify trend direction, to identify our trend like chart pattern, and to identify our entry criteria. Okay. So which I will cover more in a details in next upcoming chapter. So these are valid zone. Okay. Look at this one. What happened here? This is our another flag pattern here. This is a strong bullish candle and breakout. You don't need to buy here. Why? Because if you are willing to buy here, then what happened here? Where is the stop loss? Stop loss just below it. So what happened? Market push downside and take the stop loss and create another structure here. And this become our larger structure and market go higher. Okay, so probably you need to wait for it to reject from the exponential moving average so we can buy or sell. Okay, so this is important. Other thing is here, look at this one. This is a strong, clear structure here. Breakout, and after this breakout, price continue go higher. Okay, but you don't need to enter here. Why? Because price cannot react from your exponential moving average. Price must be react from your 50 moving average, then we can buy here because market momentum is a bullish. That's why. Same thing happening here. Look at this one. Market created a bearish. Same thing happening here. Market created another bullish pattern here. Look at this one. How price smoothly broke this one. Okay, so if market broke this one and create any bullish continuation candlestick here, like strong bullish candle, and market momentum is a bullish, chart pattern is a bullish, and price close of the 50 moving average, and this candle must be a strong bullish candle is here, which was already created here. So we can enter here at this point, right? Where is stop loss? Just below it, right? And where is target? At least 1:2. This is our target. Press enter here, and this is exit. Again, what are you looking here? Same thing happening here. The market momentum is a bullish, and this is our another flag pattern is created here. So what are you looking at this point? In this case, you can see two bullish strong candlestick here. So this is a valid setup or not? Yes, absolutely. This is one is our also valid setup here. Look at this one. These two candles are very strong candlestick, and we can buy here. Absolutely. And market reject from your exponential moving average, and we can buy here. Okay, and where is stop loss? Just below it. And where is target? The 1:2. But in this case, what happened here? Price type here, give small reaction and failed. So if this one is a failed, this one is a okay. Why? Because you follow the plan, you follow the trend. It doesn't mean that every time you win. No, it's all about probability. Where is our high probability? You need to identify those all. So in this case, you can see how many times your market take profit, but this time this become our valid loss. Okay. Again, what happened here? And market push downside, it doesn't mean that market direction has been changed. No, market direction is still not changed. Everything is still bullish here. There is no bearish indication still. Why? Because market momentum push downside and create another bullish indication here. There is no bearish indication. If market pushing downside like this and create any flag continuation pattern here, so we can sell here, and price must be close below the 50 moving average, then we can sell here. So this become our valid entry zone for the sell. Right now, there is no bearish indication. Just market grab the liquidity. Just market taking out the stop loss, and after taking out the stop loss, market creating inner ranging and create larger structure. So why this move happened here? Because this one is a larger structure, and this is our larger flag here. Start from this point to this point right here, and this one to this point. Looks like this one. So what is this? This is our larger structure. So we can identify simply the price is extremely bullish and continue going high. And market break this one. Okay, so if market break the flag pattern is here, absolutely we can buy here. Look at this one. This is the entry point here, and this low is our stop loss, and 1:2 our target point. So this is our entry point, and this is our stop loss. Everything is here. If you are thinking that you should wait for breakout, or you can buy or sell based on EMA rejection, you can buy or sell on both type of strategy. First one is here, if price react from 50 moving average, for example here, this one and this one, 2 times market close of the 50 moving average. But this one is a not strong confirmation. That's why we are waiting for to break the this flag pattern and close of it, and then we can buy here. Otherwise, this is our internal flag pattern is here from here. But this one is a not relevant, like not a good entry. This one is our very high probability entry for the buys. So I hope you understand that how we can use moving average to additional confirmation for the buy and sell. So in this video, enough for the day, and I will see you in the next chapter. Happy trading.